around this price, there were a lot of sell orders. But as soon as price goes higher, even more sell orders will be there because, prices are higher. People are going to sell at higher prices. So the higher price goes, the more sell orders.
Welcome to Trader Versus episode 3. Today we welcome Cas. This is going to be a good one, as both Cas and myself have been trying to do this for a while now. I think the analysis in this video is brilliantly explained. Remember folks, the goal isn't to see who is right or wrong, as we can both be right or wrong. It is to display different styles of trading from traders all over the world. So sit back, relax and enjoy. Subscribe to make sure you don't miss the next episode, as I do have a few guests lined up. Comment any questions you have for either Cas or myself, and like the video if you got any value from it at all. Let us begin. Alright guys, welcome to episode 3 of Trader Versus. We have here joining me Cas, and I met him within the tradingnut ecosystem. We've actually become pretty close friends, pretty good friends over the few months or so that we've been talking and all of that. And today we have Cas. Cas, welcome to the show. How you doing?
Thank you for having me. I'm doing great. Hope you're doing great too.
I'm doing perfect, my brother. So what are you going to analyze for us today? What is the pair you're choosing?
So today I want to take a look at GBPNZD, as it has been a very interesting pair for a couple of months now, and there are some interesting things I'm seeing. So yeah, I wanted to share that with you guys.
All right, good. So take it away. Floor is yours.
All right. So when I do my analysis, I always start at the higher time frames. So it will always be the daily time frame for me.
Okay. Right.
And I like to keep the charts clean, so the only things I look at are key swing points. Now, what is a key swing point for me? For example, this high right there. Why is that the case? It's because if you take a look at the trend, it basically, this high created this down move. This was the swing in, this is the swing out. So it's a very important area. Something happened there that caused the market to go down. And I like to see, what happens when we get back to those levels. So that's why I highlight those levels. Now, in this instance, this was, at the end of April. As you can see, we went back to that level. We broke it, but immediately we went back below that within a couple of days. And this is what I use in my trading, because this is really telling. And now we're seeing the exact same thing happening. So we got this key swing high, we broke it, and we're rejecting there. So what I'm then looking for is price forming some kind of range, then a breakdown, and then I will look for short setup. So I'm not entering right now, I'm waiting, but these are the locations that I always look at for trade ideas, if that makes sense.
Interesting. So let me ask this, right? Is it that you are going, it's not necessarily resistance?
No, true. I want to see the resistance broken before I take short. So most people will be seeing this as like, oh, it's a resistance, let's short. But I actually want to see it break first, then come back. Because if you take a look at what happens, people that sell just before such levels, they tend to place a stop above there. And people that are buying breakouts, as soon as the market goes below that level, they are now trapped in a losing position and they need to get out. And I use that information to frame trade ideas.
Interesting. So in other words, what the break that you're waiting for is somewhat about grab of liquidity.
Exactly. Yeah.
Interesting. All right. Cool. Anything else you want to show me on this?
So I start with a daily time frame, and then I go to the hourly time frame. I don't go lower. That's just my style of trading. I'm a swing trader. I like to keep the higher time frames. But what I then look for on the lower time frames is something like this. So this now is the range high. And I like to see something like this to happen. If we then break the low end of the range, that's when I look to enter the retest to play the next move down. So, if you're familiar with the Wyckoff method, this is essentially a distribution range.
Yeah. So let me ask.
And that's all I do.
Let me ask this as well. So you are waiting for, let me just get my thing to draw here. You're waiting for price to break down here to clear this low, suggesting that this low no longer holds, right?
Exactly. Yeah.
Right. And then the retest would give you. All right. So if you enter on the retest, you're entering somewhere here, I'm guessing.
Yeah.
Where would you put your stop?
9 out of 10 times it will be above the last high that we created. So
what is that in terms of pips? Could you tell me?
It depends. On average, I think 50 to 100 pip stop loss I use. Yeah.
Right. And what's your like typical risk reward?
1 to 1.5, 1 to 1.2. So not really those big targets, but that's because my win rate, is higher.
High.
Yeah. That's why.
It's interesting. And it goes so beautifully with, again, the concept of the show, because 1 to 1.1 or 1 to 1.2 is not something that I would feel for me is worth it, right? Especially if I'm spending all of this time trying to figure out what the thing is going to do. But in your case, because your win rate is really, really high and you have the patience to wait for that thing to actually play out, I could see how it could actually work for you. Right.
Yeah, and the thing is, I don't trade one market. I trade 22 markets.
Good.
So I get enough setups during the month for me to trade like this. I mean, like if you're trading just one market, trading like this will probably not be the best thing to do because you don't have that much trades. But because I have, plenty of setups, trading like this is actually worth it.
Interesting. So let me ask one other thing as well, right? Is it that you are more of a predictive trader in this sense then, or you're more reactive?
I actually wait, and I wait a lot. So I'm naturally very patient, and I use that in my trading style as well. I believe that you should play to your strengths. Absolutely. So what I mean is that most people would be, if they see something like this and they're familiar with liquidity grabs or false breakouts or whatever you want to call it. Exactly, they try to get in here.
Yeah.
And you often get stopped out if you aim for that. Obviously, if you're right, you get a huge move and you might get the best risk to reward. What I like to do is wait. We see a breakout. Okay, price is staying here. Then I enter. And this really, it takes a lot of patience, but it's essentially for the style I trade, it's the safest entry. I wait a lot.
I agree with that wholeheartedly, because when you see my analysis on this exact same pair, I think you will kind of get almost immediately where I'm going. Now, my analysis is going to be a little different in terms of figuring out, what I am interested in. But the concept that you're applying is actually very similar, and you'll understand once you finish with your analysis. Let me ask a question as well. Is there a reason why you don't go lower than the 1 hour? Because I'm guessing you'd enter on the 1 hour.
Yeah, I enter on the 1 hour.
Right.
Multiple reasons. First of all, when I started with the strategy, and that's years ago,
right,
I still had a part-time job, and I needed to combine trading with that part-time job.
Right.
So this allows me to be really passive, place the trades in the evening, and then work during the day.
Yeah.
And I liked it so much, and it still works. So I just keep it like this, and that's why. But I also believe that most people are on the lower time frame for the action, and essentially your goal as a trader is to make money. It's not to have action, and you can get action somewhere else with your girlfriend, whatever. But it's about making money, and I do believe that people that only trade the 5-minute time frame, it's possible, but you're making it harder for yourself because there are so many price moves, price up and down, and if you stay on the higher time frames, it's a bit more calm, and it's it helps you to control your impulses in that sense. So
I actually really resonate with that as well, because what you said is the goal of trading is to make money and not for the action. And I think when we bring it down to its core, which is to make money for itself, that's what it's about. When we bring it down to its core, if you simplify it enough, you'd realize a lot of the processes that a lot of the masses do is not necessary.
Yep, agree. Yeah.
So yeah, I mean, I feel like I resonate with this beautifully. It's a very unique style from my perspective, because it's not necessarily support or resistance, but it's using those core principles and the way that they work against the masses, essentially. Because you are selling when the market sold off of a resistance, but you're not selling at the resistance itself. You're waiting for that confirmation.
Yep, exactly. Yeah.
That is beautiful. I like that. I love that, man. All right. Anything else you want to add to this?
Let me think. Well, I do believe that it should be simple. So what I explained here to you on the charts, that's actually the only thing I do.
Right.
I have very clear rules for this, and this is the only thing I do. I trade one pattern, repeat it in all markets that I trade, and sometimes I have to wait for a day. So be it, I'm here to make money, like I said, and I'm not here to trade. So I just wait, I check the pair, does it fit the plan? Yes, I take the trade. If it doesn't fit the plan, great, I have extra time to backtest new ideas, to build new strategies, whatever it is.
Yeah.
But I think that's the kind of the mindset, the professional mindset that you need to develop to be able to, okay, there is nothing on the charts right now, I'm closing it down and I'm going to work on something productive for my trading instead of forcing things, instead of, looking price going up and down. Might be entertaining, but it's not going to bring you anywhere.
Absolutely. I think as well too, a lot of people forget why they even came into this industry, right? They forget that they came into this industry for freedom, right? Or freedom of time. But how can you consider yourself free when you're sitting in front of the charts looking for, according to you, action all day, right?
Yeah, exactly.
So that's beautiful, man. That's beautiful. All right. Anything else? You let me know when you're finished. Let me know when you're ready to go on.
In terms of moving my stop loss, so a lot of people ask me, I'm a swing trader, I aim for 100, 200, 300 pip moves.
Right.
Do I move my stop loss? Do I move to break even? From my experience, for most people, especially swing traders, you shouldn't be touching your stop loss. You shouldn't be scaling out. You shouldn't be scaling in general, from all the testing I've done. The reason being is, let's say that I'm gonna draw this on the screen. So let's say you're smart enough to be selling somewhere here. You sell the breakout.
Right.
And price goes there and you're like, oh yes, I'm in profit, so I'm going to move to break even because then I can't lose anymore. Price comes back, does a retest, which is perfectly normal behavior for a market.
Absolutely.
You were stopped out, market
And then it
continues.
goes, yeah.
And this is I see this so often, especially with beginning traders, because they trade their P&L, they trade the profit and loss. Oh yes, I'm in profits, I'm gonna move to stop because I don't want to lose. But actually, if you take a look at what the market does and how it moves, is it tends to, if there's a big move, it tends to retrace. And then you're stopping out just because you don't want to lose. And basically, you're actually buying resistance. If you're selling and you hit your stop loss, it's a buy order. So you're just buying resistance. Doesn't make any sense. And that's a mistake a lot of people make.
You see, I think there was a guy, I think Cam recently interviewed him. I believe it was him who said it, Navin Prithiani. He had this theory, I believe it's him, called the rubber band man theory. Right, and what he said is the market typically does that. That's completely, as you said, it's completely normal behavior. Where you see a big swing, it'll pull back, and then it'll go again, and it'll pull back. It might consolidate and go again and pull back, and it keeps doing that. And it does that in beautiful unison or a beautiful order. And the reason for that is every time it pulls back, that could be profit taking, that could be going into a period of consolidation, grabbing liquidity. And if you trail, not knowing when to trail, or at least the smart way to do it, and I'll explain how I do it. I think that, yeah, you're right. You will be stopped out prematurely, right? Yep. Only to just give away anything that you stood to make. So yeah, that's brilliant. Yeah,
it comes from a point of uncertainty, I think, that a lot of people have. They are not, they're not really confident in what they do. And if you develop the confidence, and like you said, if you know how to trail correctly, then it might be beneficial. But most people just do it the wrong way. Yeah. And like you said, these pullbacks are natural. Let's take this move for example. Price is here, very stable, and all of a sudden it goes up. If you could take a look at the order book in Forex now. You don't have that in Forex, but you do have it in futures. Right. You can see that around this price, there were a lot of sell orders. But as soon as price goes higher, even more sell orders will be there because, prices are higher. People are going to sell at higher prices. Right. So the higher price goes, the more sell orders there will be. The higher price goes, the less buyers there will be stepping in because, an hour ago we were trading here. Now it's, way more expensive. So what you get is the dominance of the buying is slowing down, while the passive selling that's waiting here with all the sell limits is actually increasing and it's gaining strength. And that's why you often get these moves, pullbacks, and that's why these things happens. That's the explanation. That's why it happens.
I mean, I've never had that explanation before, and I mean, it just goes to show that even after so long, you could still learn. I've never had that explanation before. I mean, it makes absolute perfect sense what you just said, right? Whereas if there were buyers entering here, and as it goes up further, less buyers are getting in and more sellers are getting in because they want to sell at the high. More buyers would be staying in at this level because now that is what is actually, the sells are what are fueling the buy.
Yep.
Right. So
that's how it works. Yeah.
Yeah, it makes perfect sense. I mean, I understand that in practice and in logic, but I've never had it explained to me and actually to the viewers in that way. So it's beautiful. I love that.
Yeah, that's the foundation of why prices move, how they move, and this is also why the supply and demand zones work. Is because if you get these aggressive moves, there tend to be buy orders being left behind here from people that are either long and that want to defend their position, or people be willing to be okay. There was a lot of buying here. Let's see if they are still there if price comes back, and that's why demand zones work.
Yeah.
And this is why retests happen, because of the buying drying up at higher prices, pulling back. And this is, the foundation that I believe anyone should understand when they get into trading. This is what moves prices.
I'm shocked. Right, it's actually a very, very good analysis. Like I'm shocked. I'm not accustomed to having people explain things this detailed, but yet so simple, right? And I think all of the viewers watching would absolutely appreciate this. So if you're listening or you're watching and you ain't like this video yet, I think you should, because this is very, very good information, right? Obviously, we will leave the link to Cas's information, channel, links, website, whatever, in the video description. Cas, you have anything else to add?
No, I'm actually curious to see what you see on this chart.
Sure. So let's go. Let's get that going. Absolutely. All right. So this is my take on GBPNZD. Now, a lot of the principles you follow are very similar to what I believe, but I do things slightly different. The principle that I believe we to have in common is waiting for confirmation. But here's how drastic I get with it. I'm not buying unless I see it's absolutely buying. I'm not selling unless I see it's absolutely selling. And there's a reason for that. Anybody who knows me and knows I've been trading for however many years and you've been following me, I have something I see. Never go against the momentum unless a reversal is clear. Now, my principle or my reasoning behind that is I don't know exactly when or where or how or the demand zones or the supply zones. I mean, I guess I could probably learn that, and I do have a general idea as to where they might be. But instead of trying to guess or predict or whatever, this is why I asked if you are more of a predictive versus a reactive trader, right? Mm-hmm. I am not let me not say I don't wait, but I'm much more of a reactive trader, meaning I react to the data. Now, you said that you would be okay with waiting. You'd be okay with literally analyzing a pair and waiting. You also said that you have certain rules or certain rules set. And if you don't see the trade, you don't see it.
Yep.
My way of thinking here is I am a dynamic trader, whereas I would constantly adjust the particulars of my system to what it is I'm seeing. And the reason for that is I believe that each and every single trade will be different from the last in some small, minute way. They're going to have certain particulars or certain things such as highs or certain candlestick formations that would be repetitive, but there would be variations in each and every trade. This is like when you learn about trading W patterns or whatever. There are going to be variations no matter how you try to do it. If you learn to trade support or resistance, there's always going to be a variation. So instead of having this really machine kind of stuck way of doing things, I'm constantly adjusting to what the market is showing me. Now, before I even get to the analysis, what I have to first do, as I said, is I'm never going against the momentum. And I need to first figure out what the momentum is. So I would typically zoom out all the way. Right, this is something I know a lot of traders don't do. They tend to stay one way. They tend to stay in the charts one way for a very long time. I zoom out all the way because one of the things I believe a trader needs to actually do good is perspective. They need to have good perspective in order to understand what's going on. So if I zoom out all the way here, as you rightfully said, it's at a very recent high now, but it's not necessarily showing me that it's going anywhere in particular. I need to go out even further. So when I go to the daily, it looks to be bullish, but then this up here is bothering me. So here, 1 minute from since 2016, it's suggesting that it's bullish, but if we look at it logically, it's been in a range, theoretically, from since 2016. It's somewhat bullish, but it's been in a range. I'll go out even further. And then when you look at it more logically, it's actually been bearish. So sells for me would be the name of this game. Because if this were a bull market, sells would be off the table. Without a shadow of a doubt, sells would be off the table. Now, because I'm seeing on the weekly time frame, and if I even go up to the monthly, I see it's been bullish and all of a sudden it came back bearish. It's now suggested that it is very much bearish, almost coming back to the most recent low. I would focus on the bear move in this case because this is what has been prevalent at least for the last 22 years or so. I would use this as the bias. So I am in an agreement with you concerning the direction for sells, but the reasoning is different. So your reasoning would have been for it to break out of the high and grab liquidity and come back down low and all of that, and that's perfect. That works perfectly for you and that's good. But for me, I'm looking for price to do something a little different, and what that is I need price to clear an area that just was price was sticking in that area. And what I'm seeing is this for me is an area of interest because clearly it's not a support, it's not a resistance, but clearly price has been reacting off of this area from since 2016, as we said, and that's a problem. So in order for me to even consider the thought of sells on this, price would need to literally, absolutely break back down here, break below this, retest it, and then go. But I wouldn't even use this retest to enter in. I'm entering all the way down here because you remember I just said my law, what I use is I'm never going against the momentum. So even entering on the retest is a problem for me because if sells is the name of my game, meaning I'm bearish, this forms a problem. I don't know if I enter here or here or here or here that it's literally just going to stop until it could continue back up. So what I'm waiting on is for it to come back, retest, and suggest to me that this is actually a retest, and I'll explain that. I like to use a lot of the words that are thrown around within the industry, literally. Break and retest. When something is broken, it can be fixed. When something is tested, if you fail the test, you can take the test again or you can retest. So let's use that. If price breaks this area and it retests, it could fail that retest, and if it fails that retest, meaning it does not stay broken, it can go back up, meaning the retest has failed. So me trying or me trusting the retest here to sell there is a problem. What I want is I want to see that retest, the test that was taken was this, and it retested, meaning it took that test again. I want to see it pass the test by saying, yes, we are stopping here, we're not going up any higher, we're actually going back bearish. It is in here somewhere I would consider the sell, because what I'm looking for is the break to stay broken. As you said, kind of similar, but I want it to stay broken, and I want the retest to tell me, you know what, I think we're good to go. I think this break, we can't fix it, so we'll stay broken. I think sells are still the name of the game. That's what I do.
Yeah, that's really interesting. I actually have never heard someone explaining it like this. And we do have some similarities. Like, for example, when I totally get what you mean. You know, the retest can fail, and then basically you can consider it a false breakout, because essentially we break the structure, we retest, but we fail. Now it's a false breakout.
Correct.
The way I kind of prevent this, and that's what I explained earlier, is that if I trade a breakout of a range, in this case to the downside, I first want to see the high end of the range being taken out.
Right.
So if I want to short, the top end of the range needs to have a false breakout before I consider shorting. And I found that trading breakouts and retests like this does improve the win rate and the probabilities a lot. Yeah.
That's interesting. I mean, like I said, and the beautiful thing about it is it comes right back to what we said at the start, which is confirmation. Because in this industry, nobody really knows what's going to happen. The only thing that you can do is do the thing that you're supposed to be doing, which is following your rule set. Now, your rule set and my rule set would have differences in that we have slightly different reasonings for entering, but you realize again we're very, very similar in terms of why we chose the direction, right? So it just proves my point that the whole point of this show, we can literally look at the same thing and have vastly different reasonings, beliefs, concepts, and ideals. In this case, we were both bearish, but I've had scenarios where me and someone else would look at the same exact pair and I would be bearish and they'll be bullish. And the beautiful thing about that, Cas, and I think you'd agree with me, is we could both be right and we could both be wrong.
Yeah, and you could both make money on it.
Exactly, and we could both lose money on it. That's the whole idea. So to say that only one strategy works, or this is the best strategy, or this is the best this is the best that, is quite ignorant in my opinion, because to make that statement suggests that one thing will always fit everything. One shoe size will always fit everybody, and that's very ignorant.
Yeah, that's what back in the day I used to read a lot of the Market Wizards book. I think you know them. Yeah, and it's basically interviews with professional traders. And the main thing I learned from it, that literally everyone that's being interviewed in there has a different trading strategy, and yet they all make money. And that just shows you that you need to find something that just fits with you, that you understand.
Absolutely, bro. I say this all the time, that you need to trade. You said you need to trade with your strengths. I say that you need to trade in alignment with your persona. So if you're an impatient person, swing trading is not going to work for you, no matter how good of a swing strategy you learn, because you're just impatient by nature.
Yeah, I totally agree with you. Yeah, that's also the issue with learning for free on YouTube. I mean, yes, you can learn a lot on YouTube, but if the analysis or if the strategy doesn't fit with you, and yet this guy with his Lamborghini somehow is telling you it's the best strategy, then you think, oh, I need to trade like this. But you don't. You need to learn from him, and then you make something for yourself.
Absolutely.
That's the best way.
Absolutely. So I think that's it for me there in terms of my analysis. Oh wait, no, let me say, so how I trail. So all right, so cool. So let's say I do end up getting into the trade somewhere here, right? In this case, now this is the daily time frame. Now what I would do is I would look for one of two things. I would look for the most recent spike to the most recent liquidity. So what that might look like is something like this. So we have a move that suggests like this, right? So you have a break and it retests and it goes. I would enter, say, like this on this red candle here. Let me make that a little clearer. I might say enter on that red candle, and I would look at that as the most recent spike or grab of liquidity, right? I would typically try to put my stop, so I might enter entries there. I would put my stop below there, right? Because I'm just looking at the most recent place that price has tried to grab liquidity. And I have a belief that price is always trying to grab liquidity, because liquidity, as we would have discussed, is needed to move the market, right? Liquidity is the market's energy. The same way the body needs to eat and get carbohydrates and convert that to energy. Liquidity is the market's carbohydrates or energy. And if you're constantly expending energy, think about it, you're working hard. You're building a house, you're casting concrete or whatever, right? You're going to get hungry throughout the course of the day because you're expending energy, right? And the market is constantly expending energy to make these moves. So it's going to consider those pullbacks. The market saying, you know what, let me stop for a bite. Let me grab some food really quick. So I'm looking at the last place to grab the food. Once I enter here, once I enter here, if this is the last place to grab the food, I'm putting my stop there and in hopes that it continues. Now, with that being the case, I'm using the trailing stop loss method the exact same way. What I am actually doing is I'm waiting as price creates new lows. So if it does this and it starts to drop, I'm waiting for it to come back, do what it has to do, but I'm looking at this low. Only if price can break this low, come back, test it, and pass the test, then I begin the trading process.
Yeah. So basically, you're looking for the exact same things to happen that got you in the trade, but also to trail your stop loss.
Basically.
Oh, that's good.
Yes.
Yeah.
yeah, that's pretty much it. In this case, on GN, I would not trade this at all based on what I just said, because again, it's at a high right now. It's bullish, even though you might be right in terms of what I think your analysis made perfect sense. You might be right in terms of what you see. It might take out the highs and then come down here. I actually believe like it could happen. But my thing is, I don't have enough, I want to say, belly. I don't have the stomach to try to sell when I am not seeing it selling. So I would not touch this. Like personally, I would not touch this. All right, but I hope it works out for you. If it is, you do have that set to play out. And yeah, I mean, if you have anything else to add before we close off, let me know. Talk to me.
Yeah, you know, I'm still not in the trade, like I said earlier, so I'm waiting for this. And I think the difference between us is as well, you know, I'm not looking for a huge trending move.
Like
when I get a setup, let's say I get a setup at that area, I will probably aim for something around 2.0, you know, not that big of a move. And then I get out and then I wait again for a new setup. And yeah, what I do like as well is that you also start with a bias on the higher time frame, you know, a direction, you know, in which direction do you want to trade? And yes, you need to be flexible, but I think a lot of people are just stuck on the lower time frames, not looking at the higher time frames, not having any bias at all. And that's also a big issue for most traders.
Yeah, absolutely. I will end by saying this. A lot of the time, people don't understand that the entry is not as important as the bias, because if you're constantly choosing the wrong direction, but your entry, you have this sniper trader, Telegram, Instagram, screenshot bullshit, right? You have this method that, oh, I'm a sniper trader, but you're constantly choosing the wrong direction. Yeah, you get trades that look pretty good. But my thing is, the trade that looks good is not the trade that looks good, but the one that you can keep open. That's the way I look at it. Right, so and the one that you can keep open is the one that's going to be moving in your favor direction. The only way to do that, in my opinion, is to get the correct bias. And for me, the correct bias will be what the market has been doing historically.
Yeah, that makes a lot of sense, and I do agree. Yeah.
So I think you have anything else to add? Or I'm good. This was actually I feel like people will really enjoy this, especially your part. Very, very good, solid analysis. Yeah, you have anything else to add?
No, I think that's it. I think the listeners have a lot of homework, a lot of information, so they can get on with it. Absolutely. So what we will do, guys, we will leave Cas links in the video description. I might even put it up on the screen somewhere here as well. I'm not sure yet. But any links he has, to reach out to him, contact him, his website, anything that he's doing, anything he wants me to shout out for him, I will allow him to do so. Definitely check him out. I respect this trader, this guy immensely. And yeah, other than that, if you got any value from this video at all, definitely hit that like button. If you have any questions for either Cas or myself, you can definitely leave them in the comments, or you can reach out to either of us directly via the links. And definitely subscribe to not miss the next episode. I do have a few other guests lined up. If you like this, guys, you know what to do. See you all in the next one.